Hey, what's up, y'all? Welcome back. Today, I'm going to share with you guys what my Roth IRA retirement account looks like compared to the stock market. Spoiler alert, we're beating the market. I want to show you what I have and what's going on in that portfolio, as well as how it's doing overall, and share with you guys my thoughts on this compared to investing in my other portfolios, which I do high yield portfolios, income portfolios, stuff like that. So I'm going to dive into my computer here and share with you inside of my Charles Schwab account, and then we'll get into some other details as far as the spreadsheets and stuff like that go, and also the comparison of the markets and all that stuff. So let's dive in. Let me record the screen on the computer. All right, 3, 2, 1, bam. All right, here we are in my Charles Schwab account. If you look at the top of here, you can see right now it's $62,221 is the total value. You can see my cash and cash investment, $15,688. You can see the total market value is only $46,532 because I have a lot of cash. We'll get into that in a minute. So right here you see my cost basis is $31,000. So I'm up $4,830 just in in gains. What's that? What is that? 15.28%. So yeah, let me make this a little bigger for you. Down here, here's the positions that I actually have in the portfolio now. RGTI, you can see there in blue, 70 shares. I did have 100. I took my initial investment out. That's why I sold 30 shares just to get my money back and just let this ride now. Soundhound, same thing. I had 100 shares. I took my initial investment out because it was up really well. And just let the rest go. Down here, we have my ETFs, SCHB, which is the broad market ETF. It basically covers the entire stock market. I've got, you can see there, 370 shares. You can see the current price versus my price that I paid for it. It's up 15% or so. That's pretty cool. Oh, no, it's 15% of the my account. Anyway, we'll get into the percentages stuff in a minute in the spreadsheet. SCHG, big cap growth, 315 shares. That's the price now. That's my price. I bought it at. WPay, which is a newer fund from Round Hill. They basically do swaps, which if you don't know swaps, I'll make a video about swaps maybe. But this generates income each and every single week. But it's not a covered call ETF because it's not capped on the upside because of the swaps. So this can actually grow, and this holds the entire Mag 7 as well as some other tech and S&P stocks. So this is basically covering the same things that these two are covering, but it pays income each and every week. And I have 225 shares of that. Now the reason why I have this is so I can get income, because once I max out the total amount of money I'm allowed to put in here, which is $7,000 per year, I've already maxed it out. But once it gets maxed out, this is generating income, so I can keep buying more stuff, even though I can't add more money to the portfolio. So that's why I like this one income play here. Okay, to cash and money market, SWVXX is a money market fund. It's $1 all the time. I've got $10,000 in here. This pays a 4% annual yield, but it pays every single month. So this adds a little bit of money every month here. Cash. You can see the $15,000 there, $15,688 in cash. So then down here, the total cash and money market funds combined are $25,000. Okay, so yeah, I have a lot of cash. 41% of the portfolio is cash, as the market's just been on fire on all-time highs, and I don't want to deploy money at all-time highs because it might come back down. And so I'm kind of waiting for a good pullback before I start putting, a bunch of money into the market. When I say a bunch of money, I mean like all of this, right? So we're waiting for that. Also, I don't mind having cash because I might use some of this cash to put towards a house, or it's like, in a Roth IRA, you can't take out money without the money I put in, I can take it out without penalty. I just can't take out the gains without a penalty. So the money I put in, I can take out. So if I have cash here that's not tied up, I can actually take that out and use it if I want to buy like a piece of property somewhere, something like that, right? Buy some land somewhere or something, which I'm considering doing. That's why also I'm keeping some cash here in case I need it to make that purchase. So that's what's going on right there. Let me show you guys the performance compared to the markets, and then we'll look at the overall performance in the spreadsheet, as well as the dividend payments and stuff I've received. So let's go up here to the portfolio performance. Select portfolio. Let's check out the Roth. Oh, no. Let's check out the Roth IRA. Okay, here's the Roth IRA. And we're going to look at the performance just for the past month, just because we want to see how it's comparing to the market month over month. So we'll do that really quick. Okay, so first of all, you can see here, let me make it bigger. Okay, so my account had a rate of return 3.76% between October 1st and October 31st. So a pretty good gain there for the account. Let's see how it compares to the Dow Jones. You can see here, well, let's just go to this banner, it's easier. My account was 3.76 and the Dow was 2.5%. This is the Dow in the orange and mine in the blue. So you can see we definitely beat the Dow Jones. Let's check out the NASDAQ performance. So you can see the NASDAQ, see our account just was killing the NASDAQ right here. We were just way ahead of it. And then we dropped off here. We had some tariff things, I believe, some more tariff news. Anyway, we recovered really fast compared to the NASDAQ, and we bounced around a little bit. And then just here at the very end, the last few days, the NASDAQ passed us up. And you see the NASDAQ had a sharp decline. Ours wasn't as sharp. 3.76 for my account, 4.08 for the NASDAQ. Let's check out the S&P. For the S&P, that's the S&P in black. I'm in the blue. You can see definitely outperformed the S&P 500. By quite a big margin there. Look, I'm almost 4% there. The S&P was 1. Look, I was 1.65. S&P was -2. So this whole way, but you see my account is moving. You see the graph, it's moving identical to the way the S&P moves because I'm based on the index, right? I'm using index-based funds. And I have a couple of boosters like the RGTI and the SoundHound and WPay, which has some things outside the S&P that help boost this thing up a little bit. And so overall, we did pretty well compared to the S&P. 3.76, S&P was only 2.07. So we beat the S&P by a large margin. If we check out the Russell, this is the Russell in orange. Again, this chart is different than mine. The Russell moved in a slightly different way than my portfolio is moving. Like right here, they had this sharp decline, and my portfolio just kind of stayed flat. And then when they went up, I went up too. And then, here's the big decline that we all had. But yeah, overall, we definitely destroyed the Russell big time. 3.76 for me, 1.25 for the Russell. So this portfolio is definitely beating the markets. Now, I did this. You see contributions here. I deposited $1,652. This maxed out the Roth IRA for the year, so I cannot put any more money in this account until January. So I've reached the total limit there of what I can actually put in. So now that you know that, let's go have a look at the spreadsheet really fast. We'll do this really quick. So there's the positions that I just showed you guys. Again, it's just a reminder, Rigetti, WPay, SCHB, SCHG, and SoundHound. Okay, now if you check out my performance on these funds and stocks and ETFs, it's not just funds, but Rigetti up 265% in total return. You can see the market return slightly lower. It's because I was selling options on this and making premium, which gave me a higher total return. Okay, WPay, this is the market return, total return here because this pays money each and every single week. This is a brand new position as well. So it's just now brand new position. It's slightly positive. Total return is, almost 5%. So I'm happy with this one so far. SCHB, which is the overall market, 9.73% and 10.13% total return. This does have a small dividend, and it's every quarter. So the total return is going to be slightly different because I'm receiving some dividends there. SCHG is the big cap growth, 12.88%, which obviously you can see the difference between the growth fund and the broad market. The growth fund is outperforming, 3% higher than the overall market. So this one, 13% on total return. So this does have a very, very small dividend. Again, it pays every quarter. So it's not a big dividend. It's not going to be a huge fluctuation here. And Soundhound, same thing like Rigetti. I sold some options and made a little bit of options income, which slightly, increased the total return by a little bit, about 4% actually. So yeah, not too bad. Now lastly, before we end this video, I'll show you guys the dividend log, how much I received in dividends for the month of October. There's a bunch of fireworks outside. I don't know if y'all hear that or not. But anyway, down here October, WPay paid me $518 in distributions. So that's cash I can use to buy more stocks. And that's all I received. I didn't get any money from anything else. I didn't sell the options, and I didn't receive the dividends from STHB, SHG, because they're quarterly, so I won't get any more of them for a while. So yeah, this month, $518 in cash that I can use towards investing in other stuff. And overall, I'm happy with this portfolio. It's performing better than my income portfolio, obviously, because this has growth in the entire market and stuff in it. It's not just generating income. It's actually growing, with the market. And as far as what I'm considering doing with this portfolio right now, I'm really just waiting for a pullback so I can deploy cash to buy more stuff. And when I say buy more stuff, I mean add to the positions I already have. I'm not really looking to buy other positions right now. I just want to increase my positions in SCHB, SCHG, and WPay. And as far as Rigetti and Soundhound go, I'm just going to leave those alone. I've already got my money back. I've taken the money out of those stocks. And now I'll just let them do their thing for however long until I decide that, like, okay, maybe I'm going to end this. But I'm up like 300% almost on one of them and like 100% on the other one. So I don't see any need to really do anything with them right now. But yeah, so I'm just going to sit back and wait and relax and let this thing, do its thing in the background. And that's the thing about retirement accounts. You don't have to do a whole lot of active stuff. I just chose to do a few active things just to make it a little bit more exciting instead of just doing nothing, because it's just boring to me. I want to look at it and see things happen. So maybe I touch it more than I should, but that's okay. It's all in the name of fun and entertainment. So anyway, thanks for watching. Like, subscribe, all that stuff. Come join us in Discord. Have a free Discord community. Love to have you guys over there. And see you guys next time.